Today, we're diving deep into what might be the single most valuable ability in trading, identifying and riding those massive, fortune-making market trends that emerge just a few times each year. What you're about to learn could completely transform your approach to the markets and potentially your financial future. Have you ever watched in agony as a stock you sold for a modest 10% profit skyrocketed 300% in the months that followed? That sinking feeling in your stomach, knowing you identified a winner, but couldn't stay in long enough to capture the life-changing gains it offered. If you're nodding right now, you're about to discover the most critical skill that separates the wealthy market elite from everyone else. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Has this ever happened to you? You spot a promising setup, take a position, and as soon as you see a small profit, that voice in your head starts whispering, "Take it now before it disappears." So you sell, pocket your modest gain, and then watch in disbelief as that same stock continues climbing week after week, month after month, without you. This pattern repeats for countless traders, creating a perpetual cycle of small wins and massive missed opportunities. The market has a cruel way of teaching its most expensive lessons, doesn't it? But what if you could break this cycle? What if instead of being shaken out of positions prematurely, you could develop the skill to identify those rare, powerful trends early and, even more importantly, develop the discipline to stay with them as they unfold? The painful truth that most traders never confront is that they aren't ruined by the market itself. They're ruined by their own impatience. They confuse constant activity with achievement, mistaking frequent trading for progress when real wealth is actually built through patience and conviction. Think about the math for a moment. Would you rather make 50 trades that net you 2% each or catch just one 100% move? The answer seems obvious, but the psychology required to achieve that second outcome is anything but simple. It demands something most of us struggle with, the ability to do nothing when everything in your body is screaming at you to take action. Stay with me until the end of this video, because I'm going to break down exactly how to recognize these massive trends before they become obvious to everyone else. You'll discover why the daily noise that consumes most traders' attention is actually preventing them from seeing the bigger, more profitable picture. If you're serious about capturing those big market swings we've been discussing, hit that subscribe button. I share these kinds of insights every single time, focusing on the psychological aspects of trading that most channels ignore. What I've discovered after years of observing the market's most successful operators is that there's a profound hidden truth beneath the surface of trading psychology. The transformation begins when you realize that the market itself isn't what defeats most traders. It's their relationship with time and action. This mindset shift is critical because it places the power back in your hands. Behind the scenes of almost every failed trading journey is the same pattern: an addiction to action, a compulsive need to constantly be doing something. It's as if there's an unwritten belief that success must come from perpetual activity, from always having a position, from never missing a move. But this is precisely the trap that keeps most traders locked in mediocrity. The impact of this revelation can be life-changing when fully internalized. Consider what happens when you approach the market with a hunter's patience rather than a gambler's impulsivity. The hunter waits silently, sometimes for hours, for the perfect opportunity. The gambler takes every bet available, convinced that more action equals better results. The market rewards the hunter, not the gambler. It pays handsomely for quality decisions, not quantity of trades. This is where the journey takes its most challenging turn, learning to value patience as your greatest asset rather than viewing it as wasted opportunity. The most successful wealth builders I've studied share a remarkable characteristic. They trade less frequently than most, yet capture moves of significantly greater magnitude. They've mastered the art of decisive action, followed by disciplined inaction. They pull the trigger when conditions align perfectly, then have the psychological fortitude to simply watch as their thesis plays out. This capacity to do nothing, what I call strategic stillness, might be the most underrated skill in all of market speculation. While others frantically jump in and out of positions, constantly second-guessing themselves, these masters remain centered in their conviction, unfazed by the market's inevitable noise. Now, I want to go even deeper into this topic by examining exactly what happens in the mind of a trader who's caught between taking quick profits and holding for the bigger move. The internal dialogue that unfolds in these pivotal moments often determines the difference between modest returns and transformative wealth. The decisions you make in these moments aren't just about this trade or that investment. They're reflections of deeper beliefs about scarcity versus abundance, about whether you truly believe you deserve extraordinary success or have unconsciously settled for mediocrity. The psychological battle raging beneath the surface of each trading decision reveals far more about our relationship with uncertainty than most are comfortable acknowledging. What I'm describing isn't just a trading strategy. It's a complete paradigm shift in how you perceive opportunity, time, and your own capacity for patience. If you're finding yourself nodding along with these insights, write "Patience pays" in the comments. I'm curious how many of you have started recognizing this pattern in your own trading journey. What many traders fail to understand is that identifying a profitable trend isn't actually the hardest part of market success. The real challenge, the true transformation, comes in developing the mental discipline to stay with that trend once you've spotted it. This revelation changed everything for me, and it's what fundamentally separates those who merely participate in markets from those who truly profit from them. You see, the market constantly sends signals. It whispers its intentions through price action, volume patterns, and momentum shifts. And many traders can actually spot these signals quite well. The hidden truth? They still fail to capitalize on them because they lack the patience to let their winners fully develop. It's like planting a fruit tree and then uprooting it the moment you see the first tiny bud, rather than waiting for the abundant harvest that was just months away. This mindset shift from seeking quick validation to embracing the natural development of market cycles is what creates lasting wealth. But there's something even more fundamental that took me years to truly internalize. A principle so powerful that it completely altered my journey as a trader. The market simply doesn't care about your opinions. It doesn't care what you think should happen or what seems logical to you. This humbling realization is actually incredibly liberating once you accept it. I've watched countless intelligent people argue with the tape, insisting that a stock can't possibly go any higher or that a market is obviously overvalued, only to be proven wrong as prices continued their inexorable move in the exact opposite direction of their conviction. The impact of fighting the market rather than flowing with it is catastrophically expensive, both financially and emotionally. Think of the market as a powerful river. You can either struggle against the current, exhausting yourself while making minimal progress, or you can identify which way the water is flowing and position your boat accordingly. The decisions you make in these moments aren't just about this trade or that investment. They're reflections of how you navigate life's uncertainties. Now, I want to explore what happens when we stop trying to impose our will on the market and instead align ourselves with the forces already in motion. This subtle but profound shift in perspective changes everything. Rather than fighting trends that don't match our expectations, we learn to recognize and harmonize with what the market is already telling us through its actions. Behind the scenes of every successful trader's journey is this moment of surrender, not in the sense of giving up, but in the deeper sense of releasing the ego's need to be right. When you stop trying to prove something to the market and simply respect what it's showing you, trading transforms from a battle into a dance. If you've ever found yourself arguing with market movements or holding on to a losing position because you knew you were right, type "the tape never lies" in the comments. It's a phrase that might just save you from countless expensive arguments with the market in your trading journey. This philosophy of trend following reveals one of the most profound revelations in market strategy. The obsession with buying at the absolute bottom or selling at the perfect top is actually a gambler's fantasy, not an investor's wisdom. I've seen this destructive mindset create more financial scars than profits for even the most talented analysts. Ready to transform your approach to market trends? Subscribe to join thousands of traders who've stopped chasing noise and started catching real moves. Every video builds on these core principles. Think of it like this. Imagine a train departing from the station, slowly at first, then gradually building momentum until it's moving at full speed. The gamblers are those frantically trying to jump aboard while the train is still in the station, risking everything to say they got the best possible entry, or those attempting to leap off at the final destination, often miscalculating and getting hurt in the process. But the true wealth builders? They're patiently waiting on the platform, watching for clear signs that the train is definitely moving in their anticipated direction. Then, when the momentum is undeniable, but there's still plenty of track ahead, they calmly step aboard and enjoy the journey. They're capturing what I call the fat, juicy middle of the move, where the risk is lower and the profit potential remains substantial. This mindset transformation alone can revolutionize your results. It removes the pressure of needing to be perfect with your timing and replaces it with a focus on recognizing established momentum. The beautiful paradox here is that by giving up the dream of perfect entries and exits, you actually increase your probability of substantial profits. Behind the scenes of every great market fortune lies this same pattern, a willingness to forego the bragging rights of perfect timing in exchange for the security of clarity. These operators understand that the beginning of most significant moves is characterized by choppiness and uncertainty, while the end is marked by unpredictability and reversal risk. By targeting the middle portion, where the trend has declared itself but still has considerable room to run, they place themselves in the sweet spot of the risk-reward spectrum. The transformation in your trading results becomes evident when you embrace this principle. You'll find yourself sleeping better at night, experiencing less anxiety about your positions, and, most importantly, allowing your winners the breathing room they need to develop into truly significant profits. What you're doing is essentially embracing the rhythm of the market rather than imposing your expectations onto it. When you align yourself with forces much larger than any individual trader, you find yourself carried along by momentum that others miss entirely because they're too busy second-guessing every fluctuation. This subtle shift in approach, from trying to be heroically precise to being strategically patient, is often the difference between consistent profitability and perpetual frustration. If this perspective on capturing the middle of trends rather than chasing perfect timing resonates with you, write "middle is money" in the comments. Now let's explore another layer of this journey, the delicate balance between acting too early and waiting too long. But there's another layer to this journey that we need to explore. Even when you've developed the discipline to target the middle of trends, you'll never escape the fundamental truth that markets deal in probabilities, not certainties. This is where your decision-making process needs refined intuition. The market whispers its intentions through subtle signals, increasing volume, changing volatility patterns, shifts in leadership sectors, institutional money flows. These are the breadcrumbs leading to potential opportunities. But they're never promises, only possibilities. The masters of this craft don't wait for absolute confirmation before acting. By then, the move is often half complete, with the easiest profits already captured by those who moved earlier. There's a delicate balance here between impulsiveness and paralysis. Wait too long for complete clarity, and you'll forever be chasing markets that have already made their significant moves. Act too rashly on insufficient evidence, and you'll find yourself caught in false breakouts and whipsaws. Finding your personal equilibrium point between these extremes is part of your unique trading evolution. What I've discovered through years of observation is that successful operators develop a sixth sense, an almost intuitive feel for when the probabilities have shifted meaningfully in their favor. They've trained themselves to recognize patterns that others miss, not because they're seeing different information, but because they're processing the same information differently. Now, I want to examine perhaps the most counterintuitive revelation in all of market speculation. The real money isn't made from the active parts of trading, the buying and selling. The wealth is created during the waiting. This insight completely transformed my approach when I finally internalized it. Most people enter this arena believing that success comes from clever entry points or perfectly timed exits. They're constantly searching for that magical indicator or secret pattern that will give them the edge. But behind the scenes of every great market fortune is a much simpler truth. The operators who accumulated vast wealth were those who could sit still once they had identified a powerful trend. Think about that for a moment. The hardest work in speculation isn't analyzing charts or reading financial statements. It's having the emotional resilience to hold your position while the market validates your thesis. It's about cultivating patience, not cleverness. This mindset shift explains why some traders with modest analytical skills outperform brilliant analysts who can't control their impulse to constantly trade. I remember watching a position grow by 30%, feeling that surge of validation and the immediate urge to lock in profits. But the underlying trend was still intact. All the signals that put me in the trade were still present. The hardest thing I ever learned to do was nothing. To sit on my hands and let the position continue working. That single decision ultimately led to a 300% gain instead of a 30% one. If you've experienced that challenging battle between your impulse for immediate gratification and the discipline required for truly significant profits, write "Wealth waits" in the comments. The journey toward mastering this discipline is made even more challenging by another fundamental market truth. Prices never move in straight lines. This fundamental market truth makes the journey toward mastering patience even more challenging. The path of a trend resembles a staircase, not an elevator. Advances, pullbacks, and advances again. These natural fluctuations serve an essential purpose in market ecology. They shake out the timid traders who mistake healthy corrections for genuine reversals. It's during these inevitable pullbacks that most people abandon ship, surrendering their positions to those with deeper understanding and stronger conviction. The psychological impact of watching your position move against you, even temporarily, can trigger primal fear responses that override rational decision-making. That's precisely why most traders never capture significant trends. They simply can't withstand the emotional turbulence. Developing the discernment to distinguish between a normal retracement and an actual trend change is perhaps the most valuable skill you can cultivate. It's not just about technical patterns or percentage moves. It's about understanding the character of the trend itself. Is volume declining during pullbacks? Are support levels holding? Is the fundamental story still intact? These nuanced observations separate those who ride trends to their natural conclusion from those who get shaken out prematurely. One of the most liberating revelations I've experienced in my market journey is understanding that you don't need to catch every move to be wildly successful. In fact, the relentless pursuit of every market opportunity is precisely what keeps most traders trapped in mediocrity. The truth is, just one or two significant trends per year, properly identified and ridden to their conclusion, can make your entire fortune. This insight goes against everything the modern trading culture promotes. We're bombarded with notifications, breaking news alerts, and can't-miss setups that create a constant fear of missing out. This environmental pressure pushes many into a scattered approach, spreading their capital and attention too thin across dozens of marginal opportunities rather than concentrating their resources on the truly exceptional ones. Think about the consequences of this mindset shift. Instead of frantically jumping from one trade to another, what if you develop the patience and discernment to wait for those rare, perfect setups? The ones where multiple factors align: technical patterns, fundamental catalysts, institutional interest and sector momentum, all pointing in the same direction. These convergences don't happen every day, but when they do, they often signal the beginning of those massive, wealth-creating moves. It's like a treasure hunter who understands that digging hundreds of shallow holes will never be as productive as digging deeply in the few locations where all the clues suggest buried treasure. Your time, energy, and capital are precious resources. The transformation happens when you stop chasing every minor fluctuation and instead focus your attention on identifying those rare, powerful trends that can genuinely change your financial trajectory. If you're beginning to recognize how quality over quantity might reshape your approach to trading, put "less is more" in the comments. Now let's examine another crucial element that dramatically impacts your ability to capture these significant moves. Now, let's explore one of the most profound challenges in this journey, the uncomfortable truth that our own human nature actively works against our success in markets. This internal struggle creates a fascinating paradox that explains why so many intelligent, hardworking people still fail to capture significant trends. Our evolutionary programming, the very instincts that helped our ancestors survive, becomes our greatest liability when applied to market speculation. Think about it. We're naturally wired to run toward what feels good and away from what feels painful. But in markets, this instinct consistently leads us astray. We become greedy precisely when we should be cautious and fearful exactly when we should be bold. The psychological blueprint is almost universal. When prices are rising and everyone's making money, our greed intensifies. We buy more, take larger positions, and throw caution to the wind, right at the moment when risk is highest. Conversely, when markets are plunging and genuine bargains appear, our fear paralyzes us. We can't bring ourselves to buy what others are desperately selling, even though this is exactly when the greatest opportunities emerge. Perhaps the most damaging manifestation of this flawed wiring is how we handle winners versus losers. We instinctively sell our profitable positions too soon, eager to lock in gains and avoid the pain of watching profits evaporate. Yet with losing positions, we hold on stubbornly, hoping they'll recover and spare us the emotional sting of admitting we were wrong. This deadly combination, cutting winners short while letting losers run, is the perfect recipe for mediocrity or worse. The revolutionary insight here is that simply reversing these natural tendencies, holding winners longer and cutting losers quickly, immediately puts you ahead of 90% of market participants. It's not about having better information or more sophisticated analysis. It's about having the self-awareness to recognize your destructive instincts and the discipline to act contrary to them when necessary. This transformation begins when you establish clear boundaries before putting capital at risk. The hidden truth is that most traders fail, not because their analysis was wrong, but because they operate on feelings rather than rules. Think about your own experience for a moment. How many times have you entered a trade with a vague sense of "this looks good," but without any concrete parameters for how you'll manage it? Without predetermined exits for both profit and loss? Without a plan for what you'll do if the market moves sideways instead of in your anticipated direction? This ambiguity creates a psychological vulnerability that the market inevitably exploits. The journey toward consistent success begins when you establish these boundaries before putting capital at risk. Knowing exactly how you'll act if you're right, and perhaps more importantly, how you'll act if you're wrong, creates a decision framework that protects you from your worst emotional impulses. It's like having a map and compass before entering unknown territory, rather than wandering aimlessly and hoping for the best. If you've noticed yourself fighting against your own psychology in your market decisions, type "rewiring my instincts" in the comments. Now let's explore a critical element of success that separates the professionals from the amateurs. This preparedness doesn't just impact your results. It fundamentally changes your relationship with the market. When you have clear rules, the emotional turbulence of price fluctuations becomes significantly less disruptive. You're no longer making stressful decisions in the heat of the moment when judgment is most compromised. Instead, you're simply executing a predetermined plan with clarity and confidence. But here's where the journey takes its most challenging turn. Even with the perfect plan and impeccable analysis, you'll encounter what I consider the ultimate test in capturing significant trends. The hardest thing in trading isn't the thinking part, the research, the analysis, the planning. It's the sitting. This revelation completely reoriented my understanding of what creates market success. After you've taken your position, the real battle begins. The market will test your conviction in countless ways. News headlines will question your thesis. Well-meaning friends will share contrary opinions. Price will fluctuate erratically, sometimes moving sharply against you before resuming the main trend. Each of these moments creates the temptation to abandon your position prematurely, to doubt yourself, to second-guess what initially seemed so clear. The psychological impact of this noise can't be overstated. Your mind becomes a battlefield between conviction and doubt, between patience and fear. Most traders ultimately surrender to this internal pressure. They literally talk themselves out of their best positions. They allow temporary market noise to override their carefully constructed thesis, and in doing so, miss the very trends they correctly identified. Developing the resilience to sit through this noise, to ignore gossip, to maintain conviction when others are losing faith. This is the rare discipline that separates those who consistently capture major trends from those who merely identify them but fail to profit. It requires a certain philosophical detachment from short-term market movements and a deep trust in your methodology. Let's explore another crucial truth about capturing major market trends, one that might fundamentally challenge how you've been approaching opportunities. The reality is that significant wealth-creating trends rarely come from following the crowd. By the time the majority recognizes a trend, acknowledges it, and feels comfortable participating, the most profitable portion of the move has typically already occurred. This creates one of the great paradoxes in market speculation. To catch these powerful trends near their beginning, you must be willing to act when it feels uncomfortable, when your judgment and analysis diverge from popular opinion. Consider the psychological weight of this requirement. You're essentially placing your capital at risk based on a conviction that runs contrary to what most market participants currently believe. Behind every major market trend is a period of disbelief when the emerging move is dismissed, rationalized away, or simply ignored by the majority. This is precisely when the foundation for enormous profits is laid. Those who can recognize the early signals and act decisively despite the lack of social validation position themselves to capture the full evolution of the trend. If you've ever found yourself hesitating to enter a position because it can't possibly go any higher, or because your view contradicted popular opinion, only to watch it continue climbing without you, type "independent thinking" in the comments. The journey of independence comes with an additional revelation that fundamentally reframes how we understand market success. As we wrap up today's exploration of what it truly takes to catch those life-changing market trends, I hope you're walking away with a fundamental shift in how you approach your trading journey. Remember, this isn't about perfection, it's about patience, discipline, and the courage to act differently than the crowd when your analysis suggests a major move is forming. The uncomfortable truth is that the market itself isn't what ruins most traders. Their own fear, greed, and impatience do. This insight shifts the entire focus of mastery from external factors to internal ones. Mastering yourself is infinitely more important than mastering market analysis. The most elegant strategy in the world fails in the hands of someone who can't control their impulses or manage their emotional responses to market movements. I created this channel precisely to share these deeper market insights that go beyond the typical technical analysis you'll find elsewhere. If you found value in these ideas about patience, trend recognition, and psychological mastery, I'd love to have you join our community of thoughtful traders by hitting the subscribe button below. The conversations we have in the comments section often reveal even more insights than the videos themselves. If something in today's message resonated with you personally, drop a comment with "Catching the Big Swing" so I know you made it to the end. Your experiences and perspectives help enrich our collective understanding. If you found these ideas valuable, a simple like on this video helps others discover this content too. It's a small action that helps grow our community of traders focused on catching meaningful trends rather than chasing market noise. Right beside this video, you'll find our exploration of how to properly size your positions when you do identify these major trends, because finding the move is only half the battle. Click on that video when you're ready to dive deeper into maximizing your returns while managing risk effectively. Until next time, remember that the market rewards patience far more generously than it rewards activity.